Hello everybody. In the previous video, we learned a brief history of income tax in India and the major acts that were introduced in India and how they came about. The first one being the Income Tax Act 1860, introduced by the then finance member Sir James Wilson to the Governor General. The next important act being the Income Tax Act 1922, which was pursuant to the Montego-Chelmsford reforms, and the Government of India Act 1919. In this act, exclusive power to levy income tax was given to the central government or the union government. The power to levy indirect tax was given to the state governments. The next act, the first and the only Income Tax Act of independent India, was the Income Tax Act 1961. This was introduced because the Income Tax Act 1922 was very complex and the needs of a new India were very different, such as diverting investment to backward areas and the development of a savings economy. In this video, we will be learning more about the Income Tax Act 1961, the first and only Income Tax Act of independent India, how it came about, and what's the source of authority behind this act. So let's learn the authority to tax in India. Upon independence, the people of India gave upon to themselves the Constitution of India. The Constitution of India provided that no tax shall be levied or collected except by authority of law. That's in Article 265 of the Constitution of India. Now, who levies these laws or who taxes? The union government and the state government both pass tax laws. This was similar to the Income Tax Act 1922, and the similarity continues wherein Article 246 of the Constitution of India divides taxing powers into the union or central list and the state list. So, the union government can levy taxes only on items mentioned in the union list or the central list, and the state governments can only levy taxes on items mentioned in the state list. Income tax under entry 82 of the union list gives exclusive power to the central government to levy income tax. So, the exclusive power to levy income tax is with the central government. However, the central government cannot levy tax on agricultural income. Agricultural income is covered in entry 46 of the state list. Therefore, the state government levies tax on agricultural income. So, now once we know who has the power to levy income tax, let's learn how do they go about levying this tax. What are the components to levy this tax? As we have seen, the union government passes tax laws to levy tax. And the first component of income tax in India is the Income Tax Act 1961. The Income Tax Act 1961 lays down the law for income tax in India. It covers various aspects such as the territory to which the income tax applies, the mode of levying income tax, the income that is chargeable to tax, the method of computing income. The next component of income tax law is the Annual Finance Act. This act is passed annually and is presented in the form of the union budget on 1st February every year. The finance minister delivers a speech. In essence, it is a budget of the union government. As we learned in the first video, the government collects taxes to give back for the benefit of all of society in the form of facilities and services. This budget is a statement on the taxes to be collected and the expenditure on the benefits to society. The Finance Act also prescribes amendments to the Income Tax Act because the amount of tax collected and the scope of tax collected has to modify with the changing times and the requirement of the central government. The next component is the income tax rules 1962. This lays down the procedure of Income Tax Act in India. The next component is circulars and notifications. These essentially are clarifications released by the Central Board of Direct Taxes and the Finance Ministry. The next component is the legal decisions of courts. There could be a dispute on the amount of tax to be paid by the taxpayer and the amount of tax to be collected as per the central government. These disputes are taken to the court of law, and the courts lay down principles or certain laws which are binding on subsequent cases with similar facts. We will be learning about each of these components in detail in further videos. So in this video we learned that the Constitution of India gives the power or authority to tax. The union government and the state government pass tax laws. Article 246 of the Constitution of India divides taxing power with the union government on items mentioned in the union list or central list. The power to levy income tax is exclusively with the central government. The power to levy tax on agricultural income is exclusively with the state government. Then we learned the 5 components of income tax law in India. The first being the Income Tax Act 1961. The second being the Annual Finance Act. The third being Income Tax Rules 1962. The fourth being circulars and notifications. And the fifth being legal decisions of courts. Okay, in this video we learned the authority to tax in India and the components of income tax law in India. In the next video, we will pick up the first component, that is the Income Tax Act 1961. We will understand it at a broad level and then deep dive into it in subsequent videos. I will see you in the next video.